Hello, very good morning to all, and welcome to a brand new week ahead. And in fact, this is a pivotal week. Welcome to today's daily dose of market insights. I'm Kelvin here, US Special Edition, okay, US Presidential Special Election Edition. So today will be Monday, the 4th of November, 2024. So before we jump straight into our daily dose of market insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, firstly, we know that our daily dose we will kickstart with what has taken shape yesterday, that means i.e. on Friday and even on the weekend, because we just passed the Saturday and Sunday. And for today's daily dose insights, we'll cover a small tad bit about US presidential election insights, which is very important as well, as we know that US election polling day is just only one day, 5th of November, and on the 6th of November, Singapore time at around 7 a.m. all the way up to 11 a.m., we'll start to see the polls results coming in on different US states that could also potentially impact the volatility on the broad-based cross asset classes on the intraday basis, especially. And as we will sum up with a short-term technical outlook, as usual, covering the broad-based cross asset classes, and lastly, as well as I will highlight what are there, is there any or would there be any key economic indicator or events to look out for today on the intraday basis. Okay, so let's start with what has happened on Friday and over the weekend. So on Friday, I want to highlight there's two key US economic data that was released on Friday, so which will be the non-farm payroll data and as well as the ISM manufacturing data. So if you look at the data over here, was rather shocking, especially on the non-farm payroll, but market took it from a pinch of salt. Yes, there was an initial, we call it a sell-off in the US dollar, but thereafter it managed to trade back up sideways. Market is looking at initially was only a reduction about 113k jobs lesser. Again, a lesser of 113k consensus from 223k added in the month of September, but it came in only double digit, only plus 12k jobs added due to seasonality factor and due to the drastic hurricane in US that actually hit some of the Florida area, the Florida coastal area. But one thing that is comforting is that the unemployment rate didn't actually move down, so still hovering at 4.1%. That actually came in within market expectation. And we see some form of weakness on the manufacturing sector. So the manufacturing sector actually inched down lower, continues to be a contractionary mode, 46.5 versus 47.2, pardon me, in the month of September, and also below consensus of 47.6. So as we know that manufacturing sector is not a really key economic driver in terms of the US overall economy, because close to about 3/4 of the US economy is dependent more on the services sector. But markets sometimes do pay a bit of attention to the manufacturing PMI data, especially if price action on the various related cross asset classes like the major US stock indices came close to some oversold level on the intraday basis. Then after that, it rallied up to some short-term resistance level there. It could actually see some kind of a negative reaction out there, which actually it did happen, all right, on last Friday. So on last Friday, what happened we see in the US session over here is that market initially rallied all the way up. All right, it rallied all the way up after the non-farm payroll data. So market digest it in a way that it's not so bad. I mean, because of a seasonality factor due to that hurricane impact that causes the non-farm payroll headline number to came down drastically lower. Then thereafter, we start to see the ISM data coming into the at around 10 p.m. Singapore time. So at 11 p.m. Singapore time, this is where the market starts to actually sold off on the intraday basis. So still recall that on the short-term intraday technical outlook, we cover on the Nasdaq 100, especially on the Wall Street 30 as well. We do see some form of weakness in terms of the technical picture, at least on the intraday basis. Yes, oversold on last Thursday. We expect that bounce. The bounce hit some form of near-term, short-term pivotal resistance on the Nasdaq 100 before that actually sell-off took shape. So that will cover more ground on the short-term technical outlook on the Nasdaq 100 and as well as the Dow Jones Industrial Average, which is i.e. the Wall Street 30, when we covered that short-term intraday technical outlook segment in today's daily dose. So across the board, it seems the same as well for Nasdaq 100 as well. Rallied up, then thereafter we start to see the sell-off throughout the US session. Right, similarly on the Dow Jones Industrial Average as well, taking into account of in relation with news flow and as well as the technical short-term intraday technical factors at play. And if you look at the heat map of the S&P 500, this is on a Friday, one day intraday performance throughout the start of the US session all the way until the end of the US session is rather a mix. To me, I would say that it's rather mixed. I would say totally not all in the green, some form of rates, especially you look at one of the mega cap tech stocks. Apple is actually the worst performing over here. And if you were to look at because if you look at, yes, Friday was rather volatile, so we look at from a weekly performance basis. So you look at the 5-day performance basis over here, 1 week performance, we start to see actually there are more reds than green. And if you break down according to the sector, so more rates as in we can see very clear red, and especially the mega cap tech stocks are deeply in the red, most of them, except for Google and Amazon. So this is a 5-day performance, last weekly performance. And if you break down according to the 11 S&P sectors over here, let me expand my screen so that you guys could see. We start to see this 1-day performance rather mixed over here. So it's like a two-tail shape. Positive, you have the 0.66%, and we also have the healthcare defensive inching up higher as well as 0.69%. Utilities and real estate and energy took the negative tail of it. And if you look at the 1 week performance, most of them are in the red. Even the higher beta risk on technology sector is the worst performer on a weekly basis, down negative 2.83%. So we start to see that based on this kind of performance, or I'll say market breadth sector performance on the S&P 500, in line with last Friday key news event or key economic event data release, and also last week we also start to see a slew of mega cap technology stocks earnings release as well. Meta, Alphabet, we have Apple as well as Microsoft, except for Nvidia that has yet to release their earnings results. Net overall, after all this does settle on a weekly basis, it seems to be some form of medium-term weakness has started to resurface into, or I would say has started to surface into the major US stock indices ahead of tomorrow US key political risk event, which is the polling day for the US president. Okay. Then what we have over here, so the news flow on Friday, and also on weekend on Sunday, we do have this OPEC plus. So OPEC plus, the cartel, you know that the cartel has a very significant influences on oil price. So they actually delay supply restart again. So this was actually being rumored by some news flow at the start of last week, somewhere around, so not start, middle of last week, which I already shared with you all in last week daily dose, where you see oil price, yes, on last Monday it gapped all the way down because of that Israel-Iran cool down in between them, and thereafter, but however, the gap down on last Monday did manage to break below 68.65 on West Texas crude oil, then thereafter, so the trade sideways. All right, and today morning it actually gap up by 1.5%, hovering around at the 72 US dollar per barrel again. So later I'll touch more about the short-term intraday technical outlook, what are the key levels to look out for. So the key thing over here is because initially 2 or 3 months ago, they're looking to actually increase supply in the cartel, but due to this high volatility in the global markets, and especially with this upcoming US presidential election, the cartel decided to actually delay the planned supply increase by the second. It's actually the second postponement again, not the first time. So they decided to actually push back by 1 month. Okay, so will be in January. So let's see in January how the cartel will react again. So this cartel seems to me that they are looking at other external macro factors that could impact the demand and supply dynamics of oil market before deciding whether they should actually continue with their planned output hike. Okay, but for now, at least in the short term, we know that oil price seems to be holding at this key short-term pivotal support around the 68 or $67 per barrel for the West Texas crude oil. Okay, so these are the key economic data and events that take shape on Friday and their impact on the broad-based cross asset classes. All right, and as well as the weekend, which is the OPEC Plus meeting. So now let me cover more about this. US presidential insight. So this US presidential insights right now, market participants in the global markets has been very fascinated and pay very close attention to the betting odds, because these betting odds actually determine the movement of this Trump trade. So before I touch on this betting, what is a Trump trade? So Trump trade is actually favoring in terms of global market asset prices is strong dollar. Why? Because of his trade tariffs, his much more pronounced trade tariffs, or even higher trade tariffs, or more aggressive trade tariffs towards China and the rest of the world. Because his proposal is to actually hit China with additional 60%, and not even China, against the rest of the world, potentially 10 to 20% trade tariffs. So that is potentially inflationary in nature, and that could put upside pressure in the US 10-year Treasury yield, eventually a stronger dollar, which has taken shape in the last 3 to 4 weeks or so. Right, so that's Trump. And also for Trump, he actually favored very aggressive tax cuts, corporate tax cuts. So you want to bring the corporate tax cuts to as low as 12% or even lower to 10%, depending on certain circumstances. And that could also widen the US budget deficit. So by widening the US budget deficit, that also inflationary in nature. So that could potentially push up the 10-year US Treasury yield as well, which has been going up by, I think, 75 basis points, despite the Fed cut by first cut despite the Fed kicking start its first interest rate cut by a mega cut of 50 basis points, because market is paying more attention to political risk factor rather than a macro factor in the last 3 to 4 weeks. And also what we could see over here is that gold price also start to increase as well as this Trump trade narrative starts to build, because based on certain research, partisan research houses, they actually into account of whatever all of Trump policy versus a Harris policy, Trump will actually widen the U.S. Budget deficit as twice the amount by Harris policy. So that could potentially see to more potential government shutdown, which increase the risk of credit warnings by credit agency on U.S. Treasury sovereign notes as well as bonds, and that could actually benefit gold. So gold actually rallied in the 3 to 4 weeks in line with US dollar. So that actually is pretty strange, because usually gold and US dollar tends to take a opposite direction in terms of normal macro circumstances. And the reason why actually the Trump trade was in play, because Trump odds in the last 2 or 3 weeks has been hovering around 60% or slightly more. But what happened over the weekend? Over the weekend, there was this drastic push down by the betting markets from poly market, where Trump odds actually reduced below 60%. So right now it's hovering at 54.7%, whereas Harris actually improved to 45.3% for around 40%. So what we could see over here is that if you look at the trend, these betting odds over here, notice that there's inch downwards over here in the last 2 days or so, right? But Trump is still leading, but the margin is getting lesser based on the betting markets. And also market has been monitoring these 6 key swing states. So based on political scientist calculation, these 6 swing states will determine who will win the White House, and especially the states of Pennsylvania. Why? Because it has a higher electoral votes of 19, which is the highest among the 6 states. So in Pennsylvania, Trump was actually leading comfortably in the last 3 to 4 weeks, hovering at 60% and slightly above. Sometimes it's about 61, 62. But over the weekend, it actually dropped down to 54% and is now hovering at the 54% level. All right. So with this, Trump trade seems to get a bit of unwinding by the betting markets. So that actually causes the Trump trade narrative to actually see some position to unwind as well in today's Asia session. So at the start of today's Asia session, we see the dollar actually gap down, pump. So this is a 5-day rolling performance of the dollar. So we start to see the US dollar actually, the strength actually gap down. All right, so the weakest performing right now was actually against the Japanese yen. So that actually, but that very interestingly, right, come in line with our short-term pivotal resistance on the dollar yen. So still recall that on Friday we mentioned that the dollar yen we flipped to a intraday bearish bias because there's some weak technical factors that has really seen on the dollar yen at the 153 short-term pivotal resistance. And very interestingly, after last Friday key risk event, economic event, non-farm payroll data and ISM manufacturing PMI, yes, the dollar yen push up, but cannot surpass the 153 figure level. And interestingly, right after this latest betting poll where show that the Trump odds starts to dwindle a bit on the betting markets that I flashed you earlier on, we see this gap down or weakness on the dollar yen taking shape right exactly at the key pivotal resistance level. So it seems to be that right now we have technical factors we got to take note of, and this technical factors is being reinforced by this so-called binary betting markets odds that is very likely to actually shift again as we speak right now, and perhaps later in the US session as well, and even going into tomorrow. So it will be like a thermometer where we got to monitor it very, very closely. So I do expect more this kind of two-way volatility as markets try to react according to those key pivotal technical levels. Right. So yes, this is the key betting. Okay, this is how this is today's US presidential insight on share with you all, how the betting markets odds has a significant influence over the broad-based cross asset classes, especially the more reactive FX market that is taking shape right now. That means the dollar strength starts to react negatively as the Trump trade narrative start to see a bit of unwinding due to the betting odds right now is showing a slightly lower chance of Trump winning. Previously, it was very high at 60%. Now it dropped to below 60% at 54% chance. All right. And yep, that's for the US presidential insight section. So right now, let us now jump straight to the intraday technical outlook on the broad-based cross asset classes. So let me expand my screen so that you guys could actually have a better view on the chart. All right, so now let's start with the FX market first. All right, so on the FX market, let us start with the euro dollar. So we know that the euro dollar on last Friday, yes, we do have a bearish okay, this was sterling dollar, my apologies. So let me go to the euro dollar. So we know that on euro dollar on last Friday we do have a bearish bias over here below the 1.09515 level. Okay, 1.09515 level, and price action came down and hit our support zone right exactly before this gap up that was formed on today's Asia session due to the reaction from the betting market odds that's now showing a slightly lower chance of Trump winning the White House. Previously it was 60%, now it actually dropped down to 54%. So with that, this will be my V-shaped recovery intraday. So this will be indeed a pivotal support that I will have for today. All right, so this level here, let me change it. Okay, so this will be on the euro dollar ST pivot. Okay, so this will be the pivotal support that I will use for today at 1.0850, 1.0840. So we'll flip to a intraday bullish bias over here on the euro dollar. The first resistance equal to watch out for will be 1.0915. So a breakout above 1.0915 will reinforce the start of this potential, at least a short-term mean reversion rebound scenario to expose the next near-term resistance on the intraday basis at 1.0955, maximum 1.0980/1.0995, which correspond to the downward sloping 50-day moving average. Only an hourly close below 1.0840 will invalidate today's intraday bullish bias to see further weakness on the euro dollar. First, next near-term support level to watch out for if for the breakdown below 1.0840 will be at 1.0808, followed by last Tuesday minus swing low at 1.077 1.0780. Maximum will be the key medium-term pivotal support level to watch will be at 1.0750. Right, so that's for the euro dollar. Now turning our attention will be the sterling dollar. So we know that the euro dollar do have a close a direct correlation with the sterling dollar. So with this bullish bias being seen on the euro dollar, we will actually have a lower conviction of the sterling dollar to actually shape that push down to revisit 1.2860 and even 1.28 figure, which was the 200-day moving average. So with that, we will flip to a bullish bias as well for today on the sterling dollar, using 1.2910 as my short-term pivotal support for today. uh, Next near-term resistance to look out for on today's intraday bullish bias will be 1.3015, followed by 1.3060, and a breakout above 1.3060 potentially could see the next near-term resistance coming in at the next level, which is at this minor swing high area here of 8th of October at 1.3107, which is correspond to the 50-day moving average, acting as a resistance level as well. So let me put this in writing: 1.3107. Okay, only a breakdown with an hourly close below 1.2910 level, so that would invalidate today's intraday bullish bias to revisit 1.2860 and potentially even 1.28 figure level, the next near-term support level to watch, which correspond to the key 200-day moving average. So that's for the sterling dollar. Now, turning our attention will be the Asia Pacific currency against the dollar, starting with the dollar yen. So dollar yen, a quick recap as usual. You know that this is the 153 figure level that we highlighted on last Friday. Why? Because price action reintegrate below this breakdown below this minor ascending channel support level that I drew from the low of 30th of September. And for sure, this level here is indeed a key pivotal resistance where it reacted off it. So what we could see over here is that, yes, despite the price push up on last Friday during non-farm payroll data, but throughout the US session, it traded a series of very small little doji candlestick. All right. So with this gap down over here, we will maintain that intraday bearish bias. We can't tighten the key short-term pivotal resistance level to too tight, because to prevent any whipsaw. At least we know that the RSI is coming very close to the oversold region, so potentially there could be some form of near-term bounce taking shape on the intraday basis during the later part of the Asia session at the start of the European London session. So the first resistance level to watch potentially could be at this area here for that potential minor bounce, 15230 level, around 15230, perhaps actually a zone. Okay, so zone over here, 15204, 15230 level. So as long as this bounce didn't surpass 153 short-term pivotal resistance, we'll still maintain that intraday bearish bias on the dollar yen. Below 15155 exposes 150.60 / 150.30, which correspond to the rising 20-day moving average, also acting very closely to this next near-term support zone as well. Only an hourly close back above 153 figure level will invalidate the intraday bearish bias on the dollar yen to see the start of a new potential impulsive up move. In first step, retesting the minor congestion area first of 30th and 31st of July, that was rejected previously or last week at 153.80. Only a breakout above 153.80 sees 154.70 / 154.80 next. So that's for the dollar yen. Now, turning our attention will be the Aussie dollar. So the Aussie dollar also caught that Trump trade unwinding flu bug as well, where we see a massive gap up in today's Asia session, breaking above the 165.80 short-term pivotal support level, and as well as this descending trend line that is in place since the swing high of 1st of October. So with this very strong gap up that was seen on the Aussie dollar in today's Asia session, we got to respect this gap up move and flip to a intraday bullish bias using this gap up support here, and as well as the pullback of this former descending trend line now turns into a pullback support level. The lower limit will be at 65.70. So as long as this 65.70 short-term pivotal support holds for today, right now is testing the first resistance level at 66.15, which is very close to the 200-day moving average as well. Above this level sees the next short-term intraday resistance level coming in at 66.60, which correspond to this 20-day moving average. as well. So these are the two key resistance to watch out for today. However, if price action starts to break down below 65.70, then this today's push up here will be a failure bullish breakout where the bearish pressure could potentially reinstate on the Aussie dollar, with the near-term support level. Next near-term support level to watch will be at 65.40, followed by 65.20/65.10. All right, so flipping to a intraday bullish bias on the Aussie dollar, using 65.70 as my short-term pivotal support level. All right, so with that, sum up the intraday technical outlook on the major dollar FX pair. So now turning our attention now will be the major stock indices, starting with Asia, the Hang Seng 33 or the Hong Kong 33. So the Hong Kong 33 for today, it continues to trap inside this sideways range over here. So what we could see now is it actually failed to actually shape any breakthrough in this dotted red line. So this dotted red line over here, as seen on my screen, is in fact the former minor trend line support from the low of 17th of October and 25th of October, broken down, now turns into a pullback resistance where price action so far has failed to make any headway since on Friday, 1st of November. So with that, it's also hovering very close below the 20-day moving average, which also was our pivotal resistance zone that we have on Thursday and Friday at 20,850/21,050 level. So still using this as my short-term pivotal resistance level on the Hong Kong 33, still maintain that intraday bearish bias. First near-term support level to watch will be last week minor swing low, or last Thursday minor swing low at 20,150. Only a breakdown below 20,150 may expose the medium-term pivotal support zone at 19,790/19,445, which correspond to this rising 50-day moving average as well. However, if price action starts to push up and have an hourly close above 21,050, today's intraday bearish bias will be invalidated to see the continuation of at least a short-term push-up or recovery to test the next near-term resistance level at 21,550 next. Okay, so that's for the intraday technical outlook on the Hong Kong 33. Now, turning our attention will be the Japan 225 or the Nikkei 225. For the Nikkei 225 right now, liquidity will be lesser. Market movement is now just based on the Globex Nikkei 225 futures market, which is still trading. But however, the local Japanese stock market is closed for a public holiday today. So no change. Still, price action did actually surpass the first resistance level that we highlighted on Friday as well. So still using this 28,940 level that managed to see a push up during the US session, then thereafter it shaped a dip down over here. So 28,940 will still be my short-term pivotal resistance level, still maintaining that intraday bearish bias for the Nikkei 225 or the Japan 225. But for today, I will have a higher near-term support level to watch, which is this 50-day moving average here. Okay, at 38,207, only a breakdown below 38,207 exposes the next near-term support level at 37,780 next. So overall, what we could see in the Japan 225, right, it still continues to trap within this very complex sideways range since the low of 27th of September this year. Okay, it's still trading within this kind of very complex sideways range. All right, so only a push up with an hourly close above 38,940 will invalidate today's intraday bearish bias on the Japan 225 to see a squeeze up to revisit last Wednesday minor swing high area at 39,550/39,680 next. Okay, so that's for the Japan 225. Turning our attention will be the German 30, which is one of the major European stock benchmark indices. So the German 30 continues to hover below the 20-day moving average. So I'll be using this zone here over here, which is the former minor swing low of 24th of October as well. So this level will be my short-term pivotal resistance level on the German 30, 19,320/19,370. Still maintain that intraday bearish bias. First support level to watch out for, I will have a Titan one for today, will be last Friday. Okay, pardon me. Okay, so Asia session low. Okay, currently today's Asia session low at 19,190. Only a breakdown below 19,190 exposes the next near-term support level at 19,110/19,020. So that was a last Thursday minor swing low, which also correspond close to the 50-day moving average, acting as support level as well. Only a push up with an hourly close above 19,370 will invalidate today's intraday bearish bias to revisit the current all-time high area or zone at 19,690/19,755 next. Okay, so that's for the German 30. Turning our attention will be the major US stock indices. Let us start with the Wall Street 30 first. So for the Wall Street 30, what we see is that last Friday, because of mixed element, we flipped to a neutrality stance over here. So right now it's pretty much clear. Price action push up, then thereafter can't maintain that momentum and starts to gap down. Came down and gap down in today's Asia session. So the first resistance level to watch will be this gap down level, today's Asia session at 42,080, using last Friday minor swing high as my short-term pivotal resistance level on the US Wall Street 30 over here. So let me push it down over here so that you can see, which is the Dow Jones Industrial Average. So flip to a intraday bearish bias from a neutrality stand on last Friday for today at 42,000, using 42,320 as my short-term pivotal resistance level. So first support level to watch will be last Thursday and Friday Asia session minus swing low at 41,790. A breakdown below 41,790 exposes the next support level at 41,560, which is the minor congestion area here of 18th of September. Okay, only a push up with an hourly close above 43,000. Only a push up with an hourly close above 42,325 will invalidate today's intraday bearish bias on the US Wall Street 30 to potentially seize the extension of last Friday rebound to revisit the next near-term resistance level at 42,580/42,720. Above it exposes the minor swing high area next of 23rd of October at 40,060. So that's for the US Wall Street 30. Now, turning our attention will be the Nasdaq 100. So we know that the Nasdaq 100 over here, last Friday, it pushed up, hit our first resistance level at 20,155, which is also the pullback of this former bearish ascending wedge minor support level now turns into a pullback resistance, and the former medium-term descending channel support from the low of 5th of August, the dotted turquoise green line, now turns into a pullback resistance, confluencing at the similar first resistance level of 20,155, which we highlighted earlier on last Friday. So price action during today's Asia session managed to push up, retest this level again, and so far in the last hour it starts to form this bearish shooting star formation, but still no change because it can't break below last Friday minor swing low. So I do not want to tighten my short-term pivotal resistance level to be at 20,155. So I'll still use this as my first intermediate resistance to watch, still maintaining that 20,306 as my short-term pivotal resistance, similar level on Friday, which is slightly below the 20-day moving average, I think as a resistance level as well. As long as 20,306 still is not surpassed to the upside, which is our short-term pivotal resistance level, we will still maintain that intraday bearish bias on the Nasdaq 100 using last Friday Asia or last Thursday and last Friday Asia session swing low at 19,110 as my first near-term support level to watch. A breakdown below it exposes 19,810 next on the intraday basis, which correspond to the 50-day moving average, I think as a similar support level as well. Only a push up with an hourly close above 20,306 will invalidate today's intraday bearish bias to revisit the swing high area of 30th of October, which is also the previously that bearish ascending wedge upper limit as well, resistance zone at 20,560/20,615. Okay, so that's for the Nasdaq 100. Okay, so that also sum up the intraday technical outlook on the broad-based stock indices. Now, turning our attention will be the commodities market, starting with gold XAU. All right, go XAU. So go XAU/USD over here. So very interestingly, right, go XAU/USD, what we could see over here is that after the release of the non-farm payroll data, gold prices starts to push up, but can't clear above the first resistance that we highlighted on last Friday, which is at 2,773. And if you go to the daily time frame chart over here, so I could see over on the daily time frame chart, it starts to flash out this bearish divergence on gold. All right, on the daily time frame, on the daily RSI. Okay, where price action shape higher high, but however, the bearish divergence starts to take hold on the daily RSI for gold. So what you could see over here is that means potentially gold could start to do a bit of mean reversion rebound, at least to revisit the 20-day moving average and even the lower limit of this medium term ascending channel that I drew from the low of 8th of August over here. All right, so with that, let me go back to the hourly chart again. Okay, so on the hourly time frame over here, what we could see is that due to that lethargic or lackluster bearish divergence that was being flashed out on the higher time frame chart, on the daily chart, we will have no conviction to maintain the short-term intraday bullish bias on gold, despite it still hold above the 2,728 level, 2,02715 key short-term pivotal support that I highlighted on last Friday. So with that bearish divergence that's been flashed out on the daily time frame chart, the odds now has increased for a potential extension of this mean reversion decline that has taken shape since the current all-time high that was hit on 31st of October, which is at 2,790, very close to the 2,800 predefined short-term resistance that we initially aiming for, right? So using 2,774 as my short-term pivotal resistance level. First resistance level to watch was last Friday minus swing high at 2,758. So as long as today's Asia session, today's bounce didn't surpass 2,774, we will flip to a intraday bearish bias on gold XAU/USD. First near-term support level to watch will be 2,728/2,715. A breakdown below today, 2,715 exposes 2,684/2,667, which is correspond to the 20-day moving average and as well as the lower limit of the medium-term ascending channel support from the low of earlier August this year. Only an hourly push up with a daily close, only an hourly close and a push up above 2,774 will invalidate today's intraday bearish bias on gold XAU/USD to see the continuation of the impulsive up move, revisiting 2,800 next resistance level, followed by 2,826. All of them are defined by a Fibo extension cluster ring zone. Okay, so that's the intraday technical outlook for gold XAU/USD, flipping to a bearish bias below 2,774 short-term pivotal resistance for today. Now, lastly will be the West Texas crude oil. So this West Texas crude oil on last Friday, we do have a intraday bullish bias holding above the 6950/6885 key pivotal support. So this key pivotal support indeed hold in today's Asia session, where we see a gap up due to that OPEC plus supply output delay. All right, supply output delay that causes this gap up in West Texas crude oil in today's Asia session. So still no change. I do not want to tighten my key short-term pivotal support to too tight. So perhaps what we can do is that we can use this gap up here over here, today's gap up area here, this gap up here, $70.20 as my first intermediate support level to watch, as long as any potential minor pullback didn't surpass below 6950/6885 in today's later session during the European session and the US session. We'll still maintain that intraday bullish bias on West Texas oil as it continues to trade within this descending triangle range configuration on the daily time frame chart, right? So this is a descending triangle range configuration that is in place since 20th of March 2023. All right, so back to the hourly time frame. So the next intermediate resistance level to watch on the intraday basis for our bullish buyers for today, still no change at 72.25, followed by 73.15, okay, which is this congestion area here that can't break out since 22nd of October, and also confluencing with the 20-day and the 50-day moving average acting as a resistance, similar resistance zone level as well. Only an hourly close below 68.85 will invalidate today's intraday bullish buyers to revisit the lower limit of that major descending triangle range configuration 67.55/10. A breakdown below it exposes 65.70. Right, that's the intraday technical outlook for West Texas crude oil, and as well as the intraday technical outlook on the broad-based cross asset classes. Right. So with that, before we go, let's take a look at the economic calendar. What are the key events to look out for today? So today, key economic events will be rather a quiet. Okay, where is it? Sorry, pardon me. So this today's event. So today's economic calendar. Let's take a look over here. Okay, let me put it 1 star. Okay, this week. Okay, so in terms of news, economic data, as well as news flow will be rather quiet during the European session. So this one shouldn't be a major news. This is the finalized manufacturing PMI for Eurozone. That should be in line with the flash figure that was released about a week ago. So the key event to look out for will be at 9:30 p.m. Singapore time, where we have one ECB official edition speaking. And also during the Asia session, do look out for any so-called of rumored news flow as the China MPC Standing Committee meeting takes shape, starting from today all the way 4th of November, all the way up to 8th of November, because market is expecting them to actually release the exact number of that highly anticipated fiscal stimulus measure, fresh stimulus measure that the China top policymakers has more or less already guided the market. So market is looking at around 10 trillion additional fiscal stimulus. But what market wants to hear is that how this fiscal stimulus will be allocated in order to prevent any entrenchment of this deflationary risk spiral that is taking shape in the Chinese economy. So something to keep an eye out for in this week long of this standing committee, MPC standing committee meeting up from China. Any point in time, there could be potential news leak or news rumor as this meeting takes shape from 4th of November all the way up to 8th of November this week. All right, so with that, that sum up today's today's daily dose of market insights. I'm Kelvin here signing off, wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.